Welcome back everyone to the CFO Swinger Watch newsletter technical analysis video for the week of November 27th through December 1st. First of all, happy belated Thanksgiving. Now, if you guys forgot it was Thanksgiving due to your food coma that I'm sure everyone got, it was Thanksgiving last week, and that meant that last week the volume for the overall markets dropped off rather quickly. And guess what? That's exactly what we got. Now, what's interesting about this volume drop off is that this also occurred as the markets began to kind of top off here at this 456.30-ish resistance level. And I told you guys last week, I believe last Sunday in the newsletter and in the Discord, that this level here needs to be watched because this may be our pivot point for an actual pullback into the first week of December. Now, I go more into detail on what we can expect for the rest of the year, so make sure you guys read the newsletter first before you watch this video. So make sure you guys pause this video right now and then read the market summary if you guys haven't read it yet. All right, so SPY here, it's basically looking like, we're about to be consolidating between two major levels. Now, where are those levels? Well, number one, we have 456.30-ish, or if you guys want to keep it simple or round up, you guys can use 456.50, or I'll be using 456 personally. And that's our major level of resistance going forward. And then our nearest support level will be 451.50. This was a previous intraday and daily level of resistance about 2 weeks ago. But now, if we do come back down to retest this specific old resistance level and then bounce on top of it, that will give us a new support level at 451.50. And if we do see this pullback into the support level, I would want to see a coinciding retest of this daily 10 SMA, which we still have not retested at all since we've pivoted hard from this transition from October to November. So this is a pretty vertical move up, as I've been saying. And so a pullback is imminent at this point as we're hitting nearly the 2023 highs that we made back in late July. So again, I already gave you guys these two possibilities, but let me remind you guys again. So number one, there's a possibility for us to go up into that actual retest of that 2023 high at 459.44 and then pulling back, giving us a nice double top on the daily time frame, or we just pull back from this 456.30-ish retest and continue to go back down until we start to see a very nice, very large consolidation phase. Okay, so those are your two different scenarios that we can have. Now, based on last week's close, even if we had very, very low price volatility due to the fact that no one was really actively trading on Thursday, well, obviously Thursday because the market was closed, and on Friday, the market still ended up pretty bullishly. And if you guys take a look at the weekly time frame for SPY, we've been going up for 4 weeks straight, right? And the fact that even on the monthly time frame, we have broken over the previous 2 months highs, that clearly tells us that we're ready to move on up higher. And that's obviously for the longer term, but on the shorter term, on the daily time frame, we are really in dire need of a pullback, right? And I've been saying this over and over again because we absolutely need a pullback. So just keep in mind that the longer term trend is still to the upside, but the short term trend needs to have a slight reset with a pullback. All right, so that is the current analysis that I'm holding until we actually see that pullback. But again, if we don't see a pullback, well, the only other explanation for that will be, well, the longer term trend has continued to hold, and so it will continue to hold until we see some sort of a large pivot at this year's highs at 2023 at 459.44, or if we make a new high for 2023. Okay, so again, that can only happen if you just continuously trudge on up higher. All right. Okay, now the other thing that I want to talk about is the VIX. All right, so the VIX has been absolutely smashed down, and the fact that we're reaching levels that we haven't seen in the past 3 or even just more years, if you just go all the way back to 2015, 2014, this really tells us that there is an impending pullback about to occur in the equity markets, but the trend is your friend. And the VIX is telling us that the equity markets are going to continue to march on up higher, no matter how low the VIX goes. And obviously, that has been the story for the past, the entirety actually of November. Right, the month of November, we've seen the VIX getting crushed all the way back down. So, it's pretty interesting to see that a lot of bears had actually thought that the VIX was going to shoot straight up, completely ignoring the fact that seasonality trends have been on point for this entire year, and November has clearly told us the seasonality trend for just this single month was telling us that VIX tends to drop off and the markets tend to pivot back up higher from October's lows, or just roughly the entire Q3 lows, right? So, the VIX, I won't be too worried about this one for now. I'm pretty sure we're going to get slight jumps higher starting obviously on the first week of December, if you guys read the market summary. But, overall, I think VIX, we don't have to worry about it too much going forward into next year as well. Okay. Now, the other thing that I want to talk about is the 10-year yield. So the 10-year yield has topped out at 5%, right? We already talked about this multiple times. And right now, especially on Friday, we saw a lot of the big leaders kind of pulling back and selling off. And we also saw the bond yields and including the bond prices going down, but the bond yields moved up because, again, they have an inverse relationship. If you guys didn't know that yet, make sure you guys know that and understand why. And bond yields had a nice small jump to retest its this daily 10 SMA that I have on the chart. But overall, this is still in a nice large downtrend. And I don't care if it's making a nice falling wedge for a nice little breakout to the upside. We're now officially in a downtrend. Why? Because we started making lower highs. Okay, we're making consistent lower highs. I'm pretty sure there's going to be another lower high somewhere around here. Okay, and the most important part of this lower high trend is that we made lower lows. Okay, so this is clearly indicative of a textbook downtrend. So as long as there are small pops in the yields, I'm going to add onto any dips on the bonds. So again, okay, TLT, the longer term bonds, okay, and IEI, the shorter term bonds. I'm going to continue to add them on any type of dips or any type of gap downs that we get for my long-term position, right? And again, I've already explained what my long-term positions are for both of these names, so make sure you guys go back into the Discord or just ask me. Right? So with that, let's take a look at our first name, LMND, Lemonade. So this name, this company has been seeing a very nice rocket up higher after its earnings catalyst and earnings report. And I love the fact that this has been holding over its earnings gap up and earnings low, right? On this earnings reaction stays low, right? And what we're looking here on the RSI as well is that the price has been consolidating, but at the same time, the relative strength has still been fairly strong. And that tells me that buyers are ready to push this price up higher. And I love the fact that it has made this nice bullish flag or a wedge chart pattern here as it's coiling, because that means there's about, there's coiled up energy in this name, bullish energy, bullish momentum that's ready to break the price up higher. And so, the fact that we've been making this ascending support trend line while staying over this daily 10 SMA, which has caught up to the price after its initial, after the price broke away from the 10 SMA, this daily 10 SMA after earnings day here, clearly tells us that this stock is ready to start reversing up higher and potentially retesting weekly highs. And so with this type of a flag or wedge chart pattern, what I really want to see is an official breakout over this descending resistance level or trend line, which is going to be around $18.20. So that will be your official confirmation entry point. But if you guys want that earlier entry point, 17.10 is your best bet, this horizontal level of resistance. Right now, again, am I concerned about the RSI potentially hitting the overbought values again? So basically at 70 or over 70? No, because this name has a lot of room to cover. So make sure you guys read the newsletter and see what I said about LMND here to really, understand the reason why I think this name has potential to go up higher, even if the price is at overbought conditions. All right. Now, if you take a look at the weekly time frame, all right, this one has a lot of room to move. Right. So longer term price targets are at $20 and eventually $25. This is the maximum price that I want this name to see if we do see another leg up higher and we continuously make higher highs and higher lows, which is a textbook uptrend. And the reason why I say that is that, well, it seems like we have formed a temporary bottom at $10.20. And so if we were to follow what I'm basically seeing right now on this chart and assume that we're going to follow what we're looking at right now, which is a very nice big macro double bottom, we should be seeing a very rapid increase in price towards this $25 maximum price target for this name. Okay, so again, I'm gonna make it a brighter color here so that you guys can see this. Okay, so a nice W or double bottom chart pattern with both of the bottoms respecting this newly founded $10.20 support level. Okay, so hopefully that makes sense. All right. Now, our next name is Lululemon. So, Lulu. All right, this is a very, very strong brand. All right, everyone loves wearing Lulus. All right, as they say, they're going to Lulu for Lulu. I don't think they really say that, but I made that up. Maybe someone else did, but to be honest, that's what I that's what I came up with. But I will take credit for that personally for myself in my own little world. But Lulus here are very, very popular, and that's reflected on the share price, right? And to be honest, as a technical analyst trader, I truly believe that the price, price leads fundamentals. So, the fact that we've seen a lot of hype around this name and its overall brand, and the fact that the price is now reflecting that, the fundamentals of this company has been absolutely phenomenal, right? So Lulu here, the reason why I'm looking at this is that on the monthly time frame, okay, we have consistently broken over the previous month's highs. And so even with October's big move to the downside, in the eventual recovery back to the upside, we were able to break over September's month's highs. All right, I mean, that's a pretty big achievement there. And the fact that in November, we continued to break over that psychological $400 level that October wasn't able to get over and hold over just tells us volumes that this name really wants to retest the all-time high level or number at 485.83, which I have highlighted here with this yellow arrow point. And so, ideally, I would want this name to really retest exactly or even make a new all-time high number at 485.83, or realistically, at least come back to this all-time high area. So somewhere around 465 to that 485.83 range will be a very, very good area for us to take some profits if we're able to get a very good entry this week. So if I go back on the daily time frame, we are currently dealing with a very small micro bull flag. And whenever I see this type of trend, so this is the trend that I'm looking at, where we're seeing consistent higher highs and consistent higher lows, right? And the fact that we have now broken over this ascending channels chart pattern, because again, when we have higher highs and higher lows, we sometimes usually tend to see an ascending chart pattern here, an ascending channel chart pattern, which is inherently bearish. But when a stock is so strong, technically and fundamentally, we usually tend to see a breakout over this ascending channel's trend line resistance, and we start to hold over this resistance, turning it into a new level of support. And that's exactly what we want to see during a key textbook uptrend. And hopefully we start to see a actual curvature move. And what I mean by that is we start to see a very rapid increase, an exponential vertical move up higher, because that's what we tend to see when the price breaks out of and negates an inherently bearish ascending channel chart pattern. All right. So for LULU here, if you want an early entry this week, okay, 432.55 will be your best bet. But if you really want a confirmed breakout entry point, longing over the month's high, so November's high of 437.06 will be your best bet. Now, obviously, I don't know this week if we're going to make a new November high, because Friday is going to be December 1st. But ideally, I want to see a new high coming in on the first day of December, so that we can get a very good entry point for the month of December, and we can be breaking over November's high of 437.06. Okay, so ideally, my entry point could be around 437.10. Right, so hopefully that makes sense. And so, with these type of candlesticks here, it's pretty crucial that you guys understand why it's important to look at bigger time frames and understanding what you should be looking out for. And again, looking for continuous breaks over the previous month's highs or even previous week's highs are essential for you to follow the trend. Again, the trend is your friend, right? The long-term trend. All right. All right, so our next name here is NET. Now, I want to start this off on the weekly time frame because NET has been basing for over a year. This is a year plus macro base that extends from $40 all the way up into $76. Now, I'm not going to focus on the $76 right now, this level here that I have, and also our official confirmed long-term entry point. But I want to zoom into, if I go on the daily time frame, on this specific level, $70. Okay, $70. And the reason why is that, as you guys already know and should know by now, software has been leading this rally up higher. It's been one of the biggest leaders in this large market move up higher. And NET has been a great beneficiary to that move up higher as a software name in its own sector, and also from the broader market move up higher. And it has gone pretty much vertical as well. And on the daily time frame, it has its own little base here between 56 and 72. And last week, we were able to pop over the 72 level. But this one is in need of a pullback, and it's been telling us that it's about to start a pullback because last Friday we got this nice lower high and lower low move here on this Friday candlestick. So if we do see a pullback, I want us to break below 72, come back down to retest 70, a psychological number here, a psychological hold number specifically, and then bounce. Why? Because even if the 10 SMA it has been retested and it holds and bounces, I want the 21 SMA to catch up at some point, because again, the price has kind of moved a little bit too far away for my own taste here. And it'll be pretty technical for this name to be able to come back down, retest 70, and kind of move sideways. So have a nice little consolidation phase before it starts to move on up higher and breaking over this candlestick's high at 75.68, which is now where I can segue into this long-term entry point at $76. So if you're able to break over $76, this whole number level, then on the weekly or even on the monthly time frame, we can be looking for a much bigger and a much higher profit target point. Okay, and so if we do get a nice entry point at 76, and hopefully, ideally, we get to see that entry point starting in December so that we are able to break over November's current highs at 75.68, we should be looking at profit targets up to 87 and all the way up to that triple digit golden number of 100. That's right, $100 per share. Okay, so again, even just on the monthly time frame, guys, this name has been consolidating really, really well. This is what you want to see on a name that has been recently leading with the rest of the market, and also is in the same sector that has been leading as well. Okay. All right, and lastly, let's take a look at GDX. So I gave you guys the number one reason why I'm looking at GDX in the newsletter. So make sure you guys read the newsletter. Right, that's the last time I'll be saying it in this video. So make sure you guys read the newsletter and then watch this technical analysis video. So GDX has been making this very, very big daily inverted head and shoulders chart pattern with the neckline at this $30 psychological whole number level. And I really love the fact that the daily 200 SMA, after curling up like this and finally allowing the price to kind of consolidate right underneath this daily 200 SMA, is now starting to flatline. And whenever I see this happening, that usually indicates that the price is ready to come back to retest the daily 200 SMA. So there is a very good opportunity here for a very good swing trade because also of that number one factor and reason why we want to be looking at gold names, specifically gold miners, right? So GDX here, if you do get a nice entry point this week over 29.55, which is an early entry point, we can get a nice profit target of $30. Okay, so we can see a nice retest or move up back to the neckline of this inverted head and shoulders chart pattern, which will also be coinciding with the official retest of this daily 200 SMA, which we have broken below it back in August of this year. And so far, we haven't retested it since. So this will be the first official retest of the daily 200 SMA and coinciding with this neckline resistance level at $30, which will give us, and I can 100% guarantee you guys this, a nice rejection. So again, if we do get that nice rejection at the $30, we will be able to see some sort of a consolidation, which will give us that longer term entry point and more of a confirmed long-term entry point at $30.15. And by that time, hopefully, we'll be able to see the price staying over this daily 200 SMA. And so on the weekly time frame, if you do get that entry point at over $30.15, we should be seeing a profit target up to $32 and eventually 34.50, or if you guys just want to round up to 35. Right? So one last thing, guys. Okay, so for GDX, just like with GLD, gold, we are seeing a very, very large multi-year cup and handle chart pattern for all gold related names. Okay, so this commodity has been making a very, very large bullish chart pattern that it has been itching to break out of. And it's very interesting that gold miners have been making a similar chart pattern, even if it might be slightly different, because for gold, we have a flat handle for its cup and handle chart pattern. But for gold miners here, GDX, we've been making a nice slanted handle or a descending channel chart pattern for its handle. It's broader macro cup and handle chart pattern. Okay, that's something that you guys should remember and note when you guys are looking to trade any type of gold related names like this gold miners ETF. All right, so that is it for this week. Hopefully you guys are back, all right, refreshed from a very, very short last week. But again, we have another major holiday coming up, which is Christmas, and you guys will be surprised, and hopefully you guys won't be surprised when you guys see that the volume is going to be even lower than Thanksgiving week. All right, have a great rest of your night, and I'll see you guys tomorrow morning. Thank you guys so much for listening, and make sure you guys leave a thumbs up down below if you guys enjoyed what you guys heard tonight. All right, have a great rest of your night, and good luck.